Assalamu alaikum, welcome back to the series of entrepreneurship, and we have to continue from here with the chapter number 3, slide number 3, and the topic which we were discussing, and that was integrated marketing and price strategies. I will start this from the beginning of the topic, which is the penetration pricing. We have already discussed penetration pricing. Second, we have already discussed skimming pricing, and we have also discussed the cost plus price, value based price. we were we have to discuss number fifth part, which is competitive pricing. Over here we're going to talk about what the competitive pricing is, and according to the definition of competitive pricing, and according to the concept which is written over here, that match or undercut competitor price to win market share. Mean to say, over here the main topic which we were discussing about the integrated marketing and pricing strategies, we were at strategy number 4. If you haven't seen the previous video, we have already discussed 2 chapters, and we were at the chapter number 3. Due to some interruption, I have to make another part, which is a part B, and in part B we have to continue from our topic which we have. The previous topic which we have covered was the value based pricing, and over here we have to start from the competitive pricing. Like, competitive pricing is that pricing in which you can say that a entrepreneur have to, if he or she is launching his product, so competitor pricing is very much important for the entrepreneur. Mean to say, what he should know that who is his competitor and what competitor is giving price to their customers. So setting the price according to the competitor is very much necessary. Mean to say, you should not keep the price upper, or you shouldn't keep the price lower as the competitor have. Meanwhile, you have to set the price in between your competitor price, or you have to improve the quality if you want to raise the price of your product. So competitive pricing is very much important in entrepreneurs while setting the price. Number 6 is like psychological pricing, means use price perceptions tricked to influence buying behavior. 99.999 feels much cheaper than as compared to thousands to customer. I've already discussed in previous slide that this, what you are doing, you are just attracting the customer. You are playing with the psychological behavior. You are playing in terms of psychology. You're playing with the customer's feeling. Like, if you're setting the price 999, mean to say it's look like cheaper. You are not going to pay the 1,000 rupees. Mean to say you're saving the amount. So this type of pricing is known as psychological pricing. Okay, so this is the case study of chapter number 3. Let's see the case study, and case study is regarding to the Daraz and scaling e-commerce in Pakistan. So Daraz was founded in Pakistan in 2012 by 18. Alibaba acquired it, making it one of South Asia's biggest e-commerce success stories. Marketing strategy used, what marketing strategy used there? They used like 4 pieces of marketing over here. Like, product means thousand of categories, introduced private label products. Okay, price, flash sales like what they're doing, 11 which is known as the 11 sales, mega sales, penetration in the market, for giving up like you can say that to acquire the market. Okay, and plus psychological pricing, that they mainly used to have like 888 rupees, okay, like 777. So these, what they are doing, they are first of all they are penetrating in the market, and secondly, what, like, for psychological pricing, I've already discussed penetrating pricing. Like, me to say, I've already discussed in the previous slide. If you want to just learn penetrating pricing in detail, so you should go and watch that video. But I will going to give you a little about the penetrating prices, that price which, like, a company, or you can say that a startup or entrepreneur enter in penetrating pricing. How they just give a very low price, like mostly like Kareem used to do. They give the very low price with the entering with the low price entering the market, and after gradually they start increasing their pricing. And skimming price is the second part, in me to say that if any company enter with the high price, so after gradually they give some, you can say, reduction in the pricing. Okay, so if we talk about the place, like mobile first app strategy and 3PL logistics, they mainly used to do, and promotion, celebrity endorsement, they mainly have influencer marketing, TV ads, and a digital social media marketing they used to do while promoting their product. Okay, like e-commerce advantage, what e-commerce advantage is: leverage B2C over here, like business to customer, in the, like me to say that they're interacting with the B2C strategy model to connect 30,000 plus small businesses to 3 million consumers, eliminating middleman and increasing margin for small entrepreneurs. Okay, like critical thinking, if we talk about the critical thinking, so which pricing strategies does Daraz use and why? I've already discussed over here that how does the e-commerce charge the traditional 4 piece. Number third is the design a social media marketing plan for a homemade product you could sell on Daraz. Okay, so these are the critical thinking questions I have given to you to work on it. Okay, so let's move toward our fourth chapter, which is the building the business plan and financial consideration. And over here we're going to talk only about the financial consideration, that how you can finance your business and what are the channels to finance your product. Okay, so over here we're going to talk about the cash flow, we're going to discuss a financial plan, winning business plans. Okay, so let's move toward the fourth chapter, slide number 1, which is 4.1, and first topic is managing cash flow, how you can manage your cash flow in your business. Okay, so cash flow is the lifeblood of any business. Profit in an option, cash is a fact. Acronyms me to say, if your business have the cash flow, you are growing. If there is no cash flow in your business, mean you are not running a very good business. So the cash flow is very much compulsory in your business. Okay, cash flow, cash inflows and cash outflows, what are they? Like sales revenue, cash plus credit collections. If you are selling, cash is coming in your business. Okay, loan proceeds from bank investor, you should take the loan from the bank or from the investors. Investment from owners or shareholders, mostly the e-commerce, or you can say the entrepreneurs, what they do, investment from owners or shareholders, they get the amount money from the shareholders or from the owners of any business. Okay, asset sales, equipment, inventory, liquidation, they mainly like you can say that they make the assets, and what they do, equipment, they make the equipment. Inventory, liquidation means you say they have the inventory, but that inventory is in terms of liquid, means they can easily sell in the market. Okay, they are not for the long term, they cap that inventory, they cap that asset, but for the short term purpose. Okay, tax refunded or government grants, like tax, they are registered, so they have opportunity to get tax return from the government. Okay, like if you talk about the cash outflow, all these things we have discussed is like cash is coming inflow. If you talk about the cash outflow, what's happening over here, like we have rent, we have to pay the rent, we have to pay the utilities and overhead expenses. Like what other expenses we're going to have, excel, we have to pay the salaries, we have to pay the wages and benefits of the employees, suppliers, inventory payments, loans repayment and investments, tax and government levies. Okay, these are the cash outflow from your business. And if you talk about the cash inflows, sales revenue. Okay, like we have sell in terms of cash, credit collection, we have to collect loan proceeds from bank, we getting the money from the bank or from the investors. Investments from owners or stakeholders, so we are getting the investment from the owners or from the stakeholders. Asset sales, equipment, inventory, liquidation, we are just selling the asset or something like that. So, okay, tax refund or government grant, that government, if you are a filer, if you pay the tax to government also give you some relaxation, they give you a tax refund in terms of some amount of money. So these are the cash inflows and these are the cash outflows from your business. Okay, let's talk about creating a successful financial plan. How we can make the successful financial plan. So income statement like P&L, profit and loss statement, like show revenue, expense and profit over a period. Okay, what income statement mainly shows, like shows revenue, what revenue you have generated, what are the expenses, and profit over a period, and what's the profit going to be after some time period. So this is the income statement is mainly talk about. Formula of the income statement is like net profit equals to revenue minus cost of goods sold minus operating expense. So this is the, you can say that the formula for the income statements net profit. Okay, what net profit means, the revenue you have generated minus the cost of goods sold, third is the operating expenses. Okay, like we have second balance sheet, snapshot of assets, liabilities and owner's equity at the point of time. Mean to say that balance sheet, in balance sheet what we're going to talk about, we are talking about the assets, what assets the company have, what assets the business owner or the entrepreneur have, and what are the liabilities, mean to say they have to pay. Okay, the third thing is and owner's equity at the point of in at time, mean to say that owners having a certain amount of money at that time. Okay, formula for the balance sheet is like asset is equals to liabilities plus owner's equity. Okay, cash flow statement, what the cash flow statement is like a break even analysis, like break even point unit, means to say fixed cost plus selling price per unit minus variable cost per unit. So this is the formula for the, you can say that the break even point. And example, fixed cost equals to like 50,000, selling price is like 200, variable cost is like 100, and BEP equals to 50,000 divided by 100, which is 500 unit. Okay, so this is the, you can say that break EP means break even point, BEP means break even point. Okay, so this over here, creating the successful financial plan, mean to say we have discussed about the, we should have the income statement, we should know about our balance sheet, and number third is the cash flow statement, we should know what the cash flow is happening in our business. Okay, so this is a little financial exercise in chapter number 4, which I have tried to give you to solve in terms of numericals, or in terms of you can use the formula over here. Like example, in cash flow statement is like a new juice bar has resale 80,000, supplier as 20,000, rent supply is 20,000, rent is 15,000, salary is like 12,000, utilities is of 30,000, opening cash rest 5,000, calculate the net cash flow and closing cash balance. So according to where inflow, we have discussed what the inflow is, the cash is coming in the company. Okay, inflow is 80,000. The juice has sales mean the cash come inside the business. Okay, outflow means 20,000, supply we have to give this amount to the supplier, like 15,000 rent, and salary is 12,000, utilities is 3,000, and rest that opening cash, mean to say like over here the remaining of these things, that the 20,000 plus 15, 20, 30, 35, 35, 45, 45, 2, 45, 47, 40, 49, 50. Altogether the cash outflow is like 50,000. Okay, the net cash is like what we going to have, like mean to say that over here 30,000 is our net flow after you can say that subtracting from here. Okay, then closing cash is we have like 5,000, mean to say like in 80,000 altogether we are just subtracting this outflow with our sales, and remaining we got the cash flow is like 30,000, and closing cash flow is like 5,000. We have to add our previous cash flow in our this net cash flow. Okay, so altogether we got 35,000. So the cash flow statement is like we got 35,000. Okay, second we're going to talk about the break even analysis, that what the break even analysis is. You manufacture homemade leather wallet. Okay, what you're doing, you're manufacturing the homemade leather wallet. Fixed monthly cost equals to 30,000, monthly cost each wallet sells for its 1500, variable cost per wallet equals to 600. How many wallets must you sells to break even? That what, at what quantity you have to sell. Okay, contribution per unit is 1500. Okay, you can see over here each wallet sells for 1500. Okay, fixed monthly cost you got 30,000. What do you have to find? Break even point. Okay, like, and secondly, cost per wallet. What at variable cost per wallet is 600 and you are selling at 1500. Okay, like as, and 1500 minus 600 you got 900 over here. Okay, contribution. Break even point, what it says, like fixed monthly cost, like, which is of 30,000. Okay, 30,000 divided by 900 what, that contribution per unit, it's like 900 contribution you got from here. So altogether you got break even point is like 33.33 mean altogether you can say 34 per month to break even point. Mean to say you have to sell at least 34 wallet per month to break even point. Okay, number third exercise is like profit and loss. We talk about how much profit and how much loss we got. Monthly revenue is like 2 lakh. Monthly revenue is coming like two. Cost of goods sold is 80,000 and the rent is sorry, rent is like 25,000 and the salary is 40. Marketing department consume like 10,000. Other expenses like 5,000. Calculate the gross profit, operating expenses and net profit. We have to calculate all together these things. Gross profit is like, we got a formula according to gross profit is like monthly revenue is like 2 lakh. Okay, we have to subtract with the cost of goods sold. How many cost of goods sold? So the gross profit is like we got 120. Mean to say monthly revenue minus cost of goods sold. Okay, we got 120, 1,20,000. Okay, next is operating. We have to find operating expense. What operating expenses? Like 25,000. What 25,000 is, which is the rent plus 40,000 salary, marketing plus other expenses is of like 5,000. So we are calculating all together these. So after summing of all these we got 80,000. Okay, net profit. So this is what operating expenses, that how much expenses applying over here for making anything. Okay, and last thing is like net profit. How to calculate the net profit is like 120, or that we just make the gross profit 120. Okay, minus 80,000 which was like cost of goods sold. So the profit we got is like 40,000. Okay, so this is the like chapter number 4. Over here we mainly talk about like what finances, what expenses mainly entrepreneur should know, and how to calculate his profit, how to manage his business in terms of calculation. So this was a very important part of the entrepreneurship. Okay, the last part, which is part chapter number 5, over here we're going to talk about the putting the plan to work, that how the plan should work, and building a competitive edge in terms of financing, in terms of location, in terms of global aspects, and in terms of succession planning. Okay, let's talk about it. This is 5.1 slide, and over here we talk about the sources of financing, debt and equity. What the debt is and what the equity is. Debt financing is like what we have like bank loans like NBP, HBL, MCB, microfinance, finance. That these are the debt financing. They provide you like the amount of money. Government SBP schemes, MS in terms of MSME, and the credit cards and the lines of credits, friend and family loans, bonds, and debentures, like types of bond you can say. Okay, if you talk about equity finance, how can you get equity financing? Personal saving, like bootstrapping, angel investor, like individual wealthy, venture capital like VC firms, crowdfunding like kickstarts businesses over here. IPO means the stock exchange listings, and from here you can just make your money. Partnershiping, buying. Okay, let's see. Pro means retain full ownerships. Positive, or you can say negative, it's like must repay plus interest regardless of profit. Okay, if we talk about the positive thing of here, so no repayment pressure, mentorship gained. And cons means like disadvantage, you can say that the shares ownership, profit and control. Okay, let's talk about the location, layout and global aspects. Location factors means to the foot traffic, then where is the mostly people are there present, so foot traffic, foot step, okay, high pedestrian flow, more customers. From where you get the more customers? Location factors, okay. Proximity to customers means near target market, reduce frictions, okay. Competitor presence, like cluster effects, food street or isolation strategy, okay. Cost of rents, like must fit your financial plans. Infrastructure is like power, internet, road parking, okay. And zoning laws mean to say local government regulations on business types, labor availability, skilled workers within commutable distance. So these are the location factors. And for the, you can say that for a business or for the entrepreneur, okay. But going globally, if you're talking about you want to run your business in globally, so you must export, like sells local made products to foreign buyers. Licensing is the type, you can say that franchising, or like type of franchise means just allow foreign firms to use your brand's IP for a fee, okay. Joint ventures, like partner with local firms in target country. Joint venture, what you're doing, you're partnering with the local firms in target country. Franchising abroad means expand your franchise model internationally. Direct investment, open a full owned subsidiary in target country, okay. So these are the, you can say that if you want to grow, so in like internationally, so you can do these type of strategies. Or if you want to want to work on the location factors, so these are the elements you should keep in your mind while just running your own business, okay. So 5.4 is like competitive edge or in management succession. What we're going to talk about it, like Porter's three generic competitive strategies. Porter is like person who gives a lot of strategies. So three strategies is cost leadership, differentiation and focus niche. Like first of all, we talk about the cost leadership. Be the lowest cost producer in your industry, attract price sensitive customers. What it's saying, like you must be the lowest cost producer in your industry, okay. Secondly is differentiation, like offer unique features, design or service that customers will pay premium for, okay. Like Apple iPhone, like Shaheen Air premium service, like what they are doing for their customers. Focus niche means to target a narrow specific market segment with specialized offering, that you are the only one who offer these things to the customers. Like target a narrow, like organic baby food, legal service for tech startups. What target and narrow mean to say, you are targeting to everyone, not for the specific person, or you can say that focus or niche. You are mean to say you are targeting, like most of the product depend on the targeting niche, that these are the niche on which we have to work. And like we only have to target a certain amount of age people or certain gender amount of people. Like we only focus on the males, or we can only focus on the females, or you can only focus on the high income paid. So these are what you can say that these are the we are focusing on the niche and we are focusing on the narrow. That sometimes the brands focus on the narrow, sometimes the brands focus on the niche of the people, okay. Management succession planning means succession planning is the process of identifying and developing future leaders who can replace founders. What succession planning is, that are it's a process identifying and developing leaders who can replace founders, key executives, okay. Mean to say newcomers should identify, work on them and replace the current people who are just getting the huge amount of money, okay. Critical for family businesses and long-term sustainability. This is for best for those, like if you are running your own business, you hire managers, you should train your own family members. So in future what you can just replace your other person, your like manager, with your own family member, okay. So what you're doing, you are just training your own people. Maybe you are just training your own blood relation. So in future is going to help you who can run your business in the more and more broader way, and who can just not only grow, but they can just make your business make in that business can run in your own family, okay. Key steps: identify potential succession early, train and mentor them. I was talking about it. Transition gradually, formalize in legal documents, partnership deeds, will, shareholders agreement. Okay, so succession planning is very much important for any business person or for the entrepreneur. Let's talk about a case study of chapter number 5, like an Engro corporation from fertilizer to a conglomerate. Okay, so let's talk about Engro fertilizers. Engro started as a fertilizer company as so Pakistan in 1965. After the government nationalized it, employees bought it back in 1991. The entrepreneurial leadership used deep depth plus equity financing, choose Turkey as the strategic location near a gas field, and expanded globally through JVs. Angro today have subsidies in food, Alpers, energy, Angro, power generation, telecoms, and more. Competitive edge strategy, what they are telling about it, that cost leadership in fertilizers, local production versus importers. They were just doing local production as compared to them importing. Okay, differentiation in food, like Alpers premium daily brand. They're working on the Alpers. It's Alpers, one of the biggest food dairy product is known in Pakistan. Okay, niche focus, LNG means energy specialized infrastructure. They also work on LNG energy sector. Okay, succession planning at Angro, board has formal succession policy with independent directors and CEO execution criteria. Okay, succession, they have working on this type of strategy. Let's talk about a critical thinking of it. Which porter strategy does Angro use for each business unit? Okay, we have discussed the three porter strategy. Let just have again look. Cost leadership they were working on. They were just working on differentiation or focus on the niche. I mean to say, like be the lowest, they were the lowest, or differentiation mean to offer unique features. They were offering the differentiation unique features, or focusing on the niche, like they were only targeting on the certain amount of people. You have to discuss. And number second, what risks did they face in going global? How did they mitigate them, and how they just make a sideline, or how they you can say that undergoes with those strategies or with those problems. Okay, design a simple succession plan for a family owned textile business in Faisalabad, that you are just running your own business of textile, so you have to design succession planning for that. Okay, so this is a quiz which I have to give, which I will going to give you, and what the quiz tests your entrepreneurship knowledge. What is the break-even formula? Like name two competitive strategies by Porter. What does SWOT stand for? Difference between the mission and vision. Name two source of equity financing, what the equity financing is all about. So this is the, we can say that a quiz regarding to this chapter, or regarding to the entrepreneurs. You should have to work on it. So and next is key takeaway, what you have learned from this chapter, that your entrepreneurship journey starts now. That entrepreneurship is about spotting opportunity, taking calculated risk, and converting idea into reality with them right mindset, with the right mindset. It's talking about it. Second, a strong business plan with clear mission, SWOT analysis, and the right ownership structure in the foundation. Third thing is third chapter talking about marketing is about right product, right price, the right place, and the right promotion, powered by the digital tools. Okay, number fourth is financial literacy. You must have the financial literacy if you are working as an entrepreneur. So cash flow, you should know the cash flow, break even, at how much you have to sell, and profit and loss, and is non-negotiable for survival. Okay, if you want to survive, so it's not negotiable. You should work on it. Again, number fifth, we have talked about build a competitive edge through porters strategies and smart financing, strategic location, and succession planning. So this is all from this chapter. I hope you have learned a lot of things. If you want to start working as an entrepreneur, this is me and the Learn with Sir Hassan. And definitely you can find me in the Facebook, you can find me on the Instagram, and you are just watching watching me on the YouTube, you can also have my number. From there I have put some different channels, my number, personal number. If you want to contact with me, you can contact with me. You can also have some TikTok channel, and you can I will do also I'm also present on the, you can say that, all these social media platform. Thank you very much. And one thing more, don't forget to subscribe, like, comment. I need your suggestion that where should I need to improve myself, and what type of thing should I give you while teaching you. And my mission and my vision is to not only train people, but just give some little knowledge with me, with my this work. I just want people to learn. There are a lot of platforms to learn, but I just want some people to motivate to start their own work, to business. And this is all. I don't want to make the video more longer. Thank you very much. And inshallah, see you in the next topic, with the new topic and with the new knowledgeable video. Till then, Allah Hafiz, take care, bye bye.